Welcome back. You're watching the Brand Equity Show with me, Sonali Krishna. Now, coming up is a very interesting conversation with Pankaj Gulati, Head of CEO Office and Chief Marketing Officer of Fincare Small Finance Bank. Now, this is an NBFC that turned into a bank in 2017. And Pankaj Gulati is here to talk about its growth story and, of course, the differentiating factors from other commercial banks. Listen in. Thank you so much, Pankaj, for joining us right here on Brand Equity.
Thank you so much, Sonali. It's a pleasure to be with you today.
Let me ask you about the growth story of Fincare Small Finance Bank, and how is it different from commercial banks for people like me and other lay people who don't understand the difference?
We are a specialized bank. This was a bank which was set up under the special guidelines of the Reserve Bank of India and some special licensing conditions. We've been on the roll for the last about 4.5 years. 2017 is when we came into existence as a bank. What is interesting is the journey of the institution prior to conversion to a bank. It is in this era, for the last about 13 years now, and about 7.5 years before the bank formation, we were operating as non-bank finance company. And as you know, that's the space where we are primarily in the lending business. Within that, as an NBFC, we were focused on the rural and semi-urban customers. So that was a space that we were sort of present in, and we were distributing loans to low-income families primarily, spread across about 11 or 12 states. Once the bank came into existence, two things happened. One, it gave us a license to start the liabilities business. So we started doing deposits, and then the story of reaching out to customers in urban markets started to happen. And second, naturally, the expansion of the institution happened from about 11 states. Today, we are operating in about 19 states. From 15 lakh customers, today we have close to 30 lakh low-income and middle-income families that we are servicing. So that's been the sort of a journey of Fincare.
Now that you've become a full-fledged bank, how would you be different from the already existing commercial bank?
As we know, the banking space is quite hot. There are public sector banks, there are private sector banks, there are cooperatives, and then there is this new crop of small finance banks and another set of institutions called payment banks. So how small finance banks are different? One, clearly the focus of small finance banks is on the unbanked and underbanked customer segments. While for the larger banks, this comes more like a mandate, from the regulator or from the government. In case of small finance bank, this is the business model. So the core business that we are engaged in is to deal with the micro entrepreneurs and micro enterprises to fulfill their credit needs. So that's clearly the case. And of course, when it comes to the urban markets, how we are differentiated from the others are in two ways. One, our digital capabilities, because we do not have legacy of, let's say, the old banking technology. We are all starting afresh in some sense, and on this new level playing field, we are not just stacked up against the old sector, private sector, or the public sector banks, but also with fintechs. So in some sense, we are very, very technology driven organization. So that's one clear area of differentiation. Any process that we set up, any customer acquisition that we do is largely digital. So, when you walk into a branch of a small finance bank like Fincare, you will be surprised that it does not look like a regular bank. There are no queues, there are no counters, there is no paperwork that you need to do. Everything is primarily fulfilled using a tab or a mobile device. So digital is one play where we are differentiated. The other is, of course, as new entrants into the play, we are differentiated on the deposit rates that we offer to the customers. So, there are certain customer segments who are looking at banks as their primary saving and investment option, especially the senior citizens, especially people who are trying to save corpus for a certain purpose. So there the differentiation comes in, because we are able to offer deposit rates at significantly higher interest rates. We are able to, in some sense, create a space for ourselves in the market. So these are the two key aspects. The third D, if I may add, So I mentioned about digital and I mentioned about deposit rates. The third D, which sort of works for small finance banks, is the doorstep model. Majority of the customers that we service do not need to visit the bank branch at all. These are customers who we are able to service, reach out at their doorstep, and take care of their basic financial and banking requirements just in the comfort of their house or office. So that's pretty much the model, for us and for small finance banks in general.
Okay, that's interesting you say that. I mean, my understanding of your core customer group after what you've just attempted to explain is that you would mainly cater to the lower socioeconomic section. But at the same time, you say when you enter, let's say, a bank like Fincare, it's it's digitally powered. Isn't that a bit of a conundrum because the lower SEC are not so digitally savvy as, let's say, the middle or the upper crust?
You rightly said it's a continuum out there, Sonali. When we talk to low-income families, their banking needs are primarily credit-oriented, and they are looking for convenience. They're looking for bank which would do minimum documentation. The process would be easy and can be done at the doorstep, so that they do not have to go to a bank branch, do extensive paperwork, do all kind of checks and balances, and then be able to procure the loan, right? So this is where somebody like Fincare Small Finance Bank comes in. We are able to come to the doorstep of that customer, right? Our field force generally carries a tab or a mobile device, and using a very simple application and collecting some basic information about the customer, where they reside, what kind of community they are living in, and doing those kind of checks, we are able to sanction, which means approve or disapprove a loan. And in majority of the cases, these are customers who are largely in rural centers, number one. Number two, they're part of what we call as a joint liability group. And third, and most importantly, these clients are women. So the moment you combine these three variables, this whole lending or the credit business becomes a whole different paradigm. And you'll be surprised, this is a customer segment of group of women and rural that combined, which has always maintained 99% plus repayment rates. So this customer is looking for convenience and doorstep. So this is what we are able to fulfill for them. Like I said, when we became a bank, we also hopped onto the other side, which means we came into the market with deposit products, which was not the case earlier. Small finance banks, after conversion to a bank, is when we started offering deposit products. And that's where the role of, where is your branch located? Is it a high street branch, commercial location, residential location? What kind of field force is there? Are they courteous? Are they into relationship building? And then what kind of technology you're using, which can be both assisted banking as well as self-banking. So that's the area that we worked on, and we've been able to provide to urban customers like you and me, whose banking needs are very different. So yes, there is a continuum of customer segments who we are servicing, and different customers have different needs, but technology is one common play. Technology is the reason why our field force, both on the credit side and on the deposit side, is able to maintain the efficiency that we currently enjoy.
Given that you're a new entrant, 2017, so relatively, still taking baby steps, how do you, and the fact that the banking space largely, if you speak about, has lost a lot of credibility over the last few years, how do you ensure that you attract customers, in terms of actually getting their trust and getting them to either take a loan or a deposit with you?
No, it's fair. So it's a fair point. I think one aspect that we need to all acknowledge is, yes, there have been bad apples in the banking space as well. There are examples which have come out which have harmed the kind of trust and confidence that customers have in banks. Having said that, I think each institution has its own trajectory. I think everyone, including the regulator, the government, the players, they've all learned a lesson from some of the past mistakes that would have occurred, or fallacies which would have been connected to the banking sector. The regulations have been tightened. For example, small finance banks operate in a very, very tight regulatory regime, and there is very close supervision by the Reserve Bank of India, the regulator for the banking space. That is one. I think the own board and the governance principles which the institution follows also makes a huge difference. So that is one area where again, different organizations may feel differently about it. But for one, Fincare Small Finance Bank has ensured that we have a very strong, a very professional, and a very independent board, independent of the shareholders of the institution, and it is a board-led bank. And among our board of directors, we have industry veterans, people who served in the regulatory bodies, in government bodies in the past, and in the private sector as well. So that combination helps us drive the right governance principles at the bank. Top it up with some of the internal policies and management philosophy that the institution runs. We feel confident that we are interested in doing business the right way, and that is the clear message which goes from top to bottom in the institution. So we've seen customers getting attracted just because we are honest and we do some of this ethical stuff. Now there is also an element of how do we position ourselves to our customers, basis which customers would see us. I think again 2 or 3 elements to that. One is how we've communicated our brand to our customers. That has been one journey, where we started from and where we stand today, and I could enumerate, give some examples of that. The second is the kind of brand ambassador association that we've created for ourselves. That is the second. And third, in some sense, the kind of regulatory positives, or the regulatory comments that we've got have also helped us position ourselves as a trustworthy brand.
How do you see Fincare as a brand in the medium term, as let's say the next 5 years? How do you see it?
It's a journey. You've known this for a very long time as well. You would have seen the trajectory of so many institutions. So in the last 4.5 years, I think we started off, like I said, by first creating a positioning for the institution on the 3 Ds, like I mentioned earlier. Come with that, the 3 Ts for the institution as well. And that's something we've tried to convey in all our brand communication. That is trust. Basically, we are a regulated organization. We've been in this business for almost 11 years prior to conversion. And this is the kind of track record we have on performance. So the trust element comes from showcasing all of that. And that's something we've done as part of a brand communication. The second is transparency. What kind of rates we offer, what kind of terms we have, is all laid out very well in all the collaterals we use and communicated to our customers right at the doorstep. So it's not that because I'm coming to you, therefore I'll remain opaque with respect to my terms and conditions. That's not the case. So there is complete transparency in what rates get charged, what are the terms and conditions of the loan, etc. And the third is technology. So we've tried to build the best technology, which is best in class. As far as small finance banks are concerned, we are fairly ahead of the curve as compared to our peers on most of our digital innovation that we've done. So we've tried to integrate these 3 Ts also in our communication. So, when you look at our social media, when you look at all our launches, when you look at all the collaterals we offer to our customers, or our in-branch branding, they all sort of come together to convey these 3 Ts, Sonali.
Well, on that note, we're completely out of time. But do take the time and drop us a line at brandequity@etnow.tv, or alternatively, you can tweet to us at Brand Equity Live. I'll catch you next week, same time, same place. Until then, keep it real.